Good evening, friends. On behalf of Banking Quest, I, Tilak Gulati, extend you warm welcome. Friends, today we are starting a training program on treasury investment and risk management in banks. This training program has been designed and structured into 20 sessions of 1.5 hour duration each. We shall be conducting this training online on Google Meet daily from 8 p.m. to 9:30 p.m. from 20th today, 20th of February till 11th of March. Friends, it gives me immense pleasure to inform that we have with us Mr. Bhaskar Sen, former Chairman and Managing Director of United Bank of India. Before taking over the reins of United Bank of India, Mr. Bhaskar Sen had served as General Manager, Treasury Operations of Union Bank of India. It is our great privilege that Mr. Sen has agreed to mentor this training program on treasury operations and risk management in banks. Mr. Bhaskar Sen, sir, on behalf of the entire team of Banking Quest and all the participants, I extend you heartiest welcome. Friends, it is also our great pleasure that we have with us Mr. A.V. Ramarao, Chief General Manager and Chief Risk Officer, Canara Bank. I accept with full humility that it is due to his guidance that Banking Quest is able to pursue its noble path of imparting training to the young bank officials. It is our great privilege that, in spite of his busy schedule, Mr. A.V. Ramarao has kindly agreed to inaugurate this training program. Mr. Ramarao, sir, on behalf of the entire team of Banking Quest and on behalf of all the participants, I extend you heartiest welcome. Bhaskar sir, Ramarao sir, before I request both of you to kindly enrich us with your valuable inaugural addresses, I would like to give a brief introduction to our organization, Banking Quest. This is one of the pioneer organization imparting training to bank officials. I would request our team member Richa Gulati to give a brief introduction to our organization, Banking Quest. Over to you, Richa.
Thank you so much, Mr. Gulati, and a very good evening to everyone. I take this opportunity to give you all a brief overview of Banking Quest and our journey so far. And on behalf of Banking Quest, we welcome you all to the training program on treasury investment and risk management in banks. Banking Quest, we truly believe in building careers in banking, and therefore, that's our vision and mission. We want to be the most preferred partner in BFI segment who can provide transformational skills development, enabling both organizations as well as individuals to achieve their goals. And we do this while through reshaping careers, re-engineering skills, and rejuvenating growth. About us, Banking Quest is founded by senior bankers who have a proven track record and a single minded focus of developing the next generation bankers. And we really pride ourselves in our distinctive and differentiated content and its delivery. We have a prime focus on the practical aspects of banking functions. We work with leading banks in the country to provide effective learning solutions with a pan India delivery capability. And if I have a chance to provide you a brief overview of our advisory council, you have met a few already on the call, but I'll take you all. So we have Mr. Mohan Tangsale, who is the mentor as well as the former chairman and managing director, Central Bank of India, and chief executive of Indian Banks Association. Professor Rajiv Kishore Dubey as mentor, who is also the former chairman and managing director of Canara Bank. Mr. Bhaskar Sen as mentor and also the former chairman and managing director of United Bank of India. And Mr. Hargovind Sachdev as mentor and also the former general manager, State Bank of India and head of Central European Credit Desk at Frankfurt, Germany, covering 15 countries of Central Europe. And we have Mr. Tilak Gulati as Chief Executive and also the former Principal, Staff Training College, UCO Bank. We really pride ourselves in the achievements that we have done so far. We have successfully trained 8,000 plus bankers from 25 different banks, including public sector, private sector, payment banks, and regional rural banks. We have the capability to deliver both classroom and online programs across India with best in class faculty. We pride ourselves in the fact that our participant rating has been consistently over 90%. And in this process of rapid expansion and venturing into different zones, we provide customized content as per the requirements of the client. Recently, we have introduced various initiatives like training program on risk management in banks and NBFCs, foreign exchange training program on MSME credit, credit management training program, treasury investment and risk management, and bank promotions training program. In terms of our capability, we really pride ourselves in the content specialization. We have the support to develop the content which can meet diverse needs of the banking professionals. We have a management team who possesses 300 plus years of total experience from various aspects of banking. We have live simulations, case studies, consultation sessions, and group exercises, which give shape to our customized content. Not just this, we have a pan India faculty pool, a pool of highly experienced and credible faculty and resource personnel. And last but not the least, our focus on the program management. So, we have the capability to deliver large scale and pan India content and rollouts with a prime focus on the holistic evaluation, which we do pre and post program assessment and comprehensive program report. And we have served 10 large clients and we are still counting. And just to name a few, Canara Bank, Federal Bank, India Exim Bank, Airtel Payments Bank, Union Bank, uh, UCO Bank, Bank of Maharashtra, SBM, HAL, and Janta Sahakari Bank. Thank you so much. I'm sharing below the credentials at which we are reachable. Every one of you can make a note, and we are happy to take this further. I'll hand it back to Mr. Gulati. Thank you so much.
Thank you, Richa. Thanks a lot. Friends, now I request our team member, Mr. S.S.N. Murthy, former Deputy General Manager, Union Bank of India, to kindly welcome Mr. Bhaskar Sen with his brief introduction. Over to you, Mr. Murthy.
Thank you,
Kindly.
Mr. Gulati.
Yeah.
I'm indeed proud and very much privileged to introduce Mr. Bhaskar Sen, the former Chairman and Managing Director of United Bank of India. I'm happy to inform the participant that I worked with this gentleman when he was Gentleman Treasury Operations Union Bank of India. Mr. Sen is unassuming gentleman. Even though he has immense potential with him, he will not expose his great traits to anyone. He is always down to earth and carries no ego with him. When he was heading Treasury, his cabin door was always open and anyone can approach him and he was very receptive. I always take pride that I also worked with this gentleman in the integrated treasury of Union Bank of India. Union Bank's integrated treasury, even in the early years of 2000, had state-of-art of technology and highly sophisticated one. It was one of the prime treasury officers on the dealing room when in the early 2000 in the financial capital of Mumbai. Mr. Sen had very great role in shaping the integrated treasury of Union Bank of India. From Union Bank, he went as executive director. He got elevation. He went as executive director of Dana Bank. From there, he got one more elevation and went as chairman and managing director of United Bank of India. The parent bank UBI has nurtured him And this highly proficient talent was given to one more UBI. He had an international assignment also during his tenure in Union Bank of India. He was selected on his merit and sent to Union Bank's only subsidiary at the time, Hong Kong, which is even today one of the busiest international market in Asia. With these few words, I invite Mr. Sen to give his inaugural address to these aspiring participants. I also thank Mr. Gulati for giving an opportunity to introduce Mr. Sen. I wish this program every success. Thanks, Mr. Gulati.
Yeah, thank you. Mr. Sen, kindly, sir.
So thank you, ladies and gentlemen, and very good evening to all of you. It is indeed a great privilege for me to be here with you, sharing my thoughts on treasury investment and risk management, and also at the same time refreshing my understanding on this particular topic. So thank you once again for giving me this opportunity, and thank you, Mr. S.S. Murthy, for your kind words.
Thank you, sir.
So, in fact, I have gone through the literature which you had sent to me, and I find that you have a very talented team in your faculty. So I'm sure a lot of discussions will take place, a lot of issues will be examined and discussed in details in next uh, 20 sessions that you have in this particular program. So for the time being, what I'll do, I'll briefly talk about how the concept of treasury has evolved over a period of time in India and also abroad. So if you remember that till about early 70s, US dollar was linked to gold. There was a gold standard. And for every ounce of gold, the rate was fixed at $15 per ounce. So effectively, that means that those days, right from the days of the Great Depression till about early 70s, I think it is 1973, the money supply was restricted to the extent of gold reserve they had at their disposal. And when money supply was restricted, the inflationary pressure was also put on hold. There was no inflationary pressure. And in the absence of inflationary pressure, there was no volatility in the interest rate. Interest rates were stable throughout this about 30, 40 years. And so those days, things were taken for granted since everything was stable, since there was no volatility. So it was assumed that there was no risk as such, and things were taken for granted. And what they used to do, the approach is now better known as 363 approach. All of you must be knowing about it. They used to take deposits, short-term deposits at 3% per annum. They used to give mortgage loans with tenure for about 30 years at about 6% per annum. And by around 3, they were free. They used to pack up and they used to go to their golf course for having a game or two with their friends and then relax themselves. That was the way of working those days. Then what happened? Then in 1973, gold standard was removed. Dollar was allowed to float freely. And immediately, since gold standard was removed, the credibility was lost for the time being, and there was huge outflow of currency. With a huge outflow of currency, there was a pressure on interest rates, and interest rates went up heavily. And what was the impact on the banking sector? A number of banks, number of savings banks, which created huge mismatches in their books, both in terms of interest rate risk and also in terms of liquidity risk. About 50% of these banks went for liquidation. So that is what happened in United States of America in mid-70s. And in our country, what happened? In our country, if you remember, all of us will be remembering till about early 90s, interest rates were fixed by Reserve Bank of India. For deposits, you did not have your own freedom. You had to accept deposits at rates prescribed by Reserve Bank of India. For loans also, interest rates were fixed by Reserve Bank of India. So as far as interest rates are concerned, there was no flexibility. All the banks, all the market participants were guided by the regulators, that is Reserve Bank of India. There were restrictions on flow of capital. There were restrictions on industries. There's lot many restrictions. And in 91, 92, what happened? In 91, 92, we saw economic reforms taking place in our country. And what were the impacts? By economic reforms, interest rates were freed in a phased manner. Exchange rates were freed in a phased manner. Capital was permitted to flow, both inflows and outflows to a certain extent. Foreign Exchange Regulations Act, a draconian piece of legislation in our country, that was replaced by Foreign Exchange Management Act, a milder version of Foreign Exchange Act. Then licenses were withdrawn in most of the cases, and there was complete freedom. There was complete freedom. New banks were allowed to start business. Licensing, as I said, licensing itself was withdrawn, except in certain cases, in cases of defense and in certain other sectors, licenses were withdrawn. And a lot of freedoms were given to the market sectors. Market forces were allowed to play in the price discovery process. So that is what happened in 92 in our country. But after that, we had this, Southeast Asia problem. We had this Pokhran blast. So the impacts, it took some time to settle down. And then Reserve Bank of India came out, if I remember correctly, it was 99. Reserve Bank of India came out with a detailed guideline on asset liability management, which is known as ALM. Now it is, everybody knows, everybody talks about it. ALM guidance was followed by another guidelines on interest rate risk management. Banks were allowed to use derivative tools for managing interest rate risks. Of course, only few types of derivatives were allowed. If I remember correctly, interest rate swaps and forward rate agreements, these were the two types initially allowed to the banks for managing interest rate risk and hedging whatever risk they have. So that is how treasury activities started showing some kind of life in our banks. Earlier, what used to happen? Earlier, are you getting me clearly? Is there any problem?
Yes, sir.
You are clear, sir. Yeah.
Okay. So earlier, what used to happen? The person who was manning the call money desk, he used to come by around 9 in the morning. He used to go through the worksheet. He used to get some kind of idea about the liquidity position of the bank. And in just 1 hour's time, he would lend or he would borrow whatever he was required to do. And by 1 hour, by around 11 or 10:30, he was free. He used to pursue his own interest. That's how it happened in our call money desk for liquidity management purpose. But after these deregulations, after these freedoms which were given to the banks, a lot of activities we have seen in our treasuries. It's not only call money market, it was activities were seen in bond market and in forex market also. Arbitrages were taking place in a huge way. And side by side, our IT sector, they came out with certain treasury packages. Of course, at the initial stage, packages were not that good, but still we had a beginning. We could streamline our systems and processes in treasury management. Payment systems, digital payments was launched. So payment system became far more robust. We had settlement system, Clearing Corporation of India was set up. So settlement risk, which was immense earlier, that came down to almost zero. So payment system was robust, settlement system was in place, and taking cue from Harshad Mehta's scam, we had this depository services, NSDL and CDSL were set up for dematting the shares and for providing depository services to the market participants. So all these things were in place, and the treasury activities became the north center of every commercial bank. So that is how we had a beginning in early 2000, and of course, streamlining started taking place. Till about 2008, we had a great time in treasury in almost all the banks. Of course, in 2008, we had this Lehman problem. There were some issues on liquidity management. Then government came out with a huge stimulus product. We had flood of liquidity. Then we had another set of problems. So in course of time, in Treasury, we gained our experience and we streamlined our systems and processes. And finally, now the Treasury activities are limited to number one, liquidity management. It's not only borrowing in call and borrowing or lending in call. There were so many other avenues for generating liquidity or disposing of liquidity. So those things are taking place. Liquidity management is a first important activity of a modern treasurer. Then after liquidity management, there were compliance risk. Uh, as a treasurer, you have to maintain SLR, you have to maintain CRR, and you cannot commit any default. We have seen during our time banks committing some default and coming to know about it late in the evening, by around 10 in the evening. So somehow, with the help of other bankers, other colleagues, somehow things could be managed. But as a treasurer, it is our primary responsibility to make sure that we should not commit any default as far as compliance of SLR and compliance of CRR are concerned. So compliance activity is one of the major activities of a treasury team. Then liquidity forecast. Liquidity forecast on a dynamic basis is not a daily affair. 30 days down the lane, 60 days down the lane, 6 months down the lane, what kind of liquidity you are going to have and how you are going to manage those kind of things, what should be your strategy. On a dynamic basis, a treasury manager has to work out. Of course, he gets full support from the system. Then, investment is not only giving loans. Banks will have some surplus funds and bank will put that money in investment in different securities. It could be government securities. It could be both central government security, which we call GSEC. It could be state government securities, which we call SGL, State Development Loan. Apart from central government and state government securities, there are a host of other securities, corporate bonds. Then there are, securitized papers. There are short-term instruments, commercial papers, certificates of deposit, host of instruments, host of products, and I'm sure you will have discussions on all these products, and the risk factors in each of these products will be discussed in details. In treasury, it is always important to maintain some kind of discipline. Some kind of discipline is to be maintained in treasury. There are certain Lakshman Rekhas. So when you strike a deal, you have to be in the front office only. A front office person only is authorized to strike a deal, nobody else. And when it comes to settlement, it is back office only. Foreign front office person cannot interfere with back office activities. So front office for striking deals, back office for settlement, for accounting, for reconciliation, and in between there is a mid office who monitors each and every activity on a real-time basis. Whether there is a breach, whether something is being done with huge risk, whether exposures are going up, whether market is moving in an adverse direction, all these things mid office has to take care. Mid office has to make an assessment. So the activities of front office, back office, and also mid office, I'm sure will be discussed in greater details when the faculty members take up these issues. So for the time being, in next few minutes, what I will do, I will talk about certain qualities. I'll talk about certain qualities, certain attributes which make a person a good treasury manager. Of course, that is my understanding. There could be some difference of opinion. There could be some additional points. Let me share my thoughts on this. how a person can be a good treasury manager. First of all, whatever products you have in treasury and whatever products you are supposed to handle during your tenure in treasury, you should develop a thorough understanding. Now, if you don't understand a product and if you handle it in a reckless manner, that can create a huge problem for the organization. So therefore, understanding the treasury products is very, very important. Secondly, you should also understand your systems and processes. What kind of systems you are having, what kind of processes you are having, what kind of MIS you are generating. Any error in keying some data or any error in monitoring the data can create some problem. We have this huge problem in one of the banks where millions of dollars were taken away by one of the diamond merchant. You know about it. Millions of dollars. So therefore, systems and processes, one has to be very, very conversant with this. Next comes your policy, your internal policy. Now, in each bank, the management is supposed to lay down a board-approved policy on treasury management. Normally, these policies are prepared within the framework of guidelines given by the regulators, in our case, Reserve Bank of India. Within the framework, the policy is prepared by each bank. Now, this policy defines the products which the treasury managers are permitted to handle. They don't give complete freedom to the treasury managers. Only a set of products, depending on their own risk appetite, the board will permit the treasury managers to handle. The policy will also set the limits for each and every activity. What kind of exposure you can have when you strike a deal. There could be product-wise limit, there could be day-night limit, there could be overnight limit, there could be country-wise limit, there could be a host of limits. So these limits, one has to understand what are these limits and why these limits have been set and what you have to do in case you breach any of these limits. So the management information system, the reporting system should be made very clear to the treasury persons. Whatever you do, you need to report to your higher authority in a summarized manner. Now, having discussed the policy directions, we also need to understand what is the sense of the regulators. Very often the regulators, not only in our country, in other countries also, they come out with certain announcements, they come out with certain press releases. Now, one need to understand the implications of these announcements, implications of these press releases, how these things are going to affect the market. And if you have a clear view that market is going to behave like this, you can take a position depending on your view. So therefore, it is very important to understand the implications of all these announcements and press releases by the regulators. Next comes your association with other treasury persons. As a treasury head or as a treasury manager, you cannot work in silos. You cannot work alone. You have host of other treasury guys, and all the treasury guys put together, you create a market. So therefore, if you think that you are the only person who will dictate the market, that is not correct. So therefore, you need to interact with other treasury persons. You need to attend, conferences are taking place on a regular basis, meetings are taking place. We have FIMDA, we have FEDI, we have so many other organizations, they call meetings on a regular basis. We need to understand what are the discussions, how they are going to affect your way of working. So these things should be very clear to your treasury manager. And finally, you need to understand the risks. And Treasury is a place, I'm not discouraging anybody, but Treasury is a place where you have all sorts of risk. You name it and you have it, whether it is market risk, whether it is operational risk, whether it is credit risk, all types of risks are there in Treasury. So you need to have a fair idea of what kind of risk you are running and how we are going to manage the risks, what are the risk mitigation tools you have, how to use those tools, all these things you need to have a very, very clear idea. And of course, I said finally, but something again, apart from all these things, whatever we discussed, there are certain other issues. And therefore, it is very important as a treasury manager, you have to keep your eyes open, you have to keep your ears open. You need to understand what is happening. Now, for example, I'll just take 2 minutes more. For example, we know there is a tension in Ukraine, right? There is a tension in Ukraine and Russian border. Now, if there is a flare up, if something goes wrong, what could be the possible implications? Now, as of today, we know that Brent crude is at around 93.6 or something like that. We also know that for last about 1 month, the pricing was not adjusted with the international standards. So there is some gap. Now, if there is a flare up in Ukraine, Russia happens to be a major supplier of crude. If there is a flare up in Ukraine, if there is some hike in Brent, that is in international crude price, maybe 15 days or 1 month down the line, that will create some adverse impact in our country also in terms of inflation. And we all know that inflation consumer price index as of today, it is almost at the higher level of the tolerance, or what we call tolerance level. It has almost breached the tolerance level of Reserve Bank of India. It is more than 6%. Now, if Brent price goes up, and if that is to be factored in India, and as we all know that 70% of our requirements we import from outside, definitely there will be some impact in our pricing. There will be some impact on the level of inflation. And if level of inflation moves up, there is no other choice but to hike interest rates. And if interest rate goes up, bond yields also will go up. If bond yields go up, Treasury will have some valuation problem. So it is very, very important for all of us to keep our ears open, keep our eyes open, understand what is happening, what could be the possible impacts, and having some kind of idea from all this, whatever is happening around us. It is our responsibility to safeguard our bank's interest, hedge all the risks, interest rate risk, liquidity risk, and at the same time make some extra money for the bank. So that's it from my side. Thank you very much for giving me this opportunity to share my thoughts with you, and my best wishes to all of you. Thank you.
Thank you, sir. Thanks a lot for such a nice deliberations, and you have given everything within short span. Everything you have covered: evolution of forex market, from regulated market to the self-sustaining market, and economic liberalization, ALM, derivatives, everything, sir. And what role of how Treasury got this significance since 2000, and how to become a good treasury manager. What is the role of treasury manager? How he has to obtain, he has to follow the Lakshman Rekha. So, sir, this is all very nice, and this will go a good advice to all the participants who are thinking, who are taking up this career in treasury operations and risk management. Thank you, sir. Thank you very much.
Thank you. Thank you.
Yeah, thank you, sir. And now I would request, friends, I would request Mrs. Shashikala Ramachandra, former General Manager and Group Chief Risk Officer, Canara Bank, to kindly welcome Mr. A.V. Ramarao, Chief General Manager and Chief Risk Officer of Canara Bank, and kindly welcome Mr. Ramarao and with his brief introduction.
Well, thank you, Mr. Gulati. And firstly, I would like to thank Mr. Sain for that wonderful insight and introduction that he has given. It was quite a refresher. And now coming to my colleague Ramarao, yes, I have seen him work in several roles. He is an all-rounder. He has been in branch, he has been in prime credit, the large exposure branch, and he has been in risk management and two levels. First, it was in the mid office, and then he has been in treasury and investment on the other side. He has been in Bahrain branch with that exposure of overseas branches, and then, of course, the pinnacle, the risk management as a chief risk officer. So he took the mantle from me, and it was my pleasure to take his name and say that I want him to be my successor. So that's how well I know him and how well, what sort of confidence we had in him to head this most responsible place in the bank. So thanks, Mr. Ramrao, for joining here, and it's really a pleasure to know. Even after the bank, I'm really nice to be associated here with Mr. Gulati and keep meeting you here off and on. Welcome to this forum, and I'm sure that it will help the bank employees a lot, especially since Canara Bank gives so much of importance to training. It is really good to know that you have been, behind this venture in getting more and more people trained in this subject. So welcome, and very warm welcome on behalf of Banking Quest and also on my personal behalf. Thank you.
Thank you, madam. Thank you.
Thank you, Mr. Gulati.
Yeah, kindly Ramarao, sir.
So, thanks once again, madam, Ramachandra madam. Shashikala madam, in fact, we don't call full name. So,
Yeah.
she's my guru.
Nobody knew about Ramachandra until I retired, I think.
Yeah, so she's my guru, as I initially itself I told. So, and also respected seniors. So, our Bhaskar sir has covered the almost overall view of the treasury. So, I need not dwell much on that, but I will try to give some other dimension of the treasury also. Treasury means, in fact, it's a combination of so many markets. It may be a forex market, it may be a rupee market, it may be a commodity market. So many markets are there. So it's a combination of all the markets. Our bank may be active in some markets. And treasury is a very big, it's like a heart to the banking community. 1/3 of the assets in any bank will be in treasury assets. So that means profits also will come like that, risk also will be like that. That is why the treasury is important. And treasury is the heart, we call it, because like heart also, blood comes and goes through veins and all. Here also cash comes to the treasury through veins, means through branches, and also flows out. So that is why the treasury plays a major role among the banks or in the banks. That's why it's called a very important department. As Sar has mentioned, either in debt management, cash management, ALM management, reputation management, compliance risks, regulatory risks. So treasury has so many roles to done. That's why a lot of importance. In fact, as Sar mentioned, it is like this global or political tensions, how they create. US sneezes, entire world gets cold. That's what the general terminology we use in treasury markets, because US plays such a big role. Yeah, and all the markets, 95% work on the news and speculation, only 5% work on actuals. So that much is the, so that's why dealer or people in the investment or people in the treasury have to be very alert. That's why we call it as 3 R's: read, respond, react. That much alert you should be. With military precision, we have to work, because dealer's word is bank's word. He does something means, even sometimes some cases management director will not have that much powers, but a dealer has that much powers. So that's why dealing room is very vibrant. He has to be very military precision. He has to work, and he has to be very active. That's why people, in fact, we select them as a dealers means he has to have certain specific qualities. That's what Sar also mentioned. And this is a 24 hours market. Change is only constant. Other things will be changing, but change is always constant in this market. So that's why we have to be very alert. Either mid office or front office or back office, all will play very active role in this treasury management, because it is very vibrant. We should know that. And as well, even capital raising also Treasury plays a role. Even either Tier 1 bonds or equity, whatever it is, we have Treasury has a role. People think that what is there in this buy low, sell high. That is what is low, what is high. Identification is going to be a big task. So that's why we need to be very, very knowledgeable or acquire knowledge, and we should be knowing what is happening in the market. Maybe the Bloomberg news or Reuters news. So many news will be coming. Some news will have impact, filtering that news, how to react to the news, how to respond to the news, either to take a buy position or I should take a sell position. So these are the things which we should learn. Not only in the front office side, back office also plays very equal role, because settlement, if whatever we have to receive, whatever we have to pay, if we don't do that promptly, it will have an impact on the bank as well as on in the eyes of regulators view also. So even though many things are automated, still individuals play a very good role in that. So all the participants who are here, they should, maybe all are not in the investment or all not in the treasury, but they can get the basics of what is investment management or treasury management and the risks involved in that. And also these are very big market. In fact, in India itself, our spot market itself, forex side is 100 billion per day. Corporate debt outstanding is around 25 lakh crores. Government borrowing is around 80 lakh crores outstanding. Such a big market. And if you know, recently RBI has come out with a retail direct scheme where individuals also will participate in the government securities. So market is expanding, government is also taking steps, and the market is wide opening. As long as certain things are now SLR may, certain things is HTM, it is not exposed to the market risk. But once it opens up, banks will be exposed to higher risk. So we should be ready with that. All the people working in the bank, they should know minimum things about the treasury. That's why we have sponsored some candidates to our banking quest. Despite this one, all these 20 sessions with the senior faculty or retired people or those who have enough knowledge, abundant knowledge, so they can share with our colleagues. They will also be benefited. Once again, thank to the banking quest for taking this initiative. All the best to the participants. Thank you all.
Thank you, sir. Thanks a lot, Rama Ji. You have given very, very good, nice advice, very good advice. Treasury is the heart of the banking operations. It plays a lot of roles, and 3 R's, sir. And dealing room, whenever any person is working in the dealing room, he has got certain specific qualities. That's why he is chosen. And dealing room is very, very vibrant. And change is the only thing which is constant in the forex market. Yeah, friends, with this advice, if you work and you have to take risk. In treasury is nothing but a risk. You have to take risk, and understanding the risk, mitigating the risk, that is very important. So now, thank you. Now I request Professor Rajesh Mahajan, our old colleague and his former general manager, Bank of Baroda, and he was heading the risk management department also. I would request Professor Rajesh Mahajan to kindly say a vote of thanks to the dignitaries and all the participants over here. Thank you. Thank you.
Thank you, Mr. Gulati, for this opportunity to extend the vote of thanks. So it was very nice hearing Mr. Bhaskar Sen, former chairman and managing director, United Bank of India. And I think he was the chairman of subcommittee of IBA on the implementation of Basel Accord also. During 2011-12, since I was also the member of that committee, so I had an opportunity of working under Mr. Sen during that period. And sir, within no time, I should say, the way you have explained the journey of the treasury operations in last about 50 years, starting from the early 70 and till date, it is mind-blowing. No one could be the better person to inaugurate this session and setting the momentum and the direction for this program. The way you have explained the things, they are all part of this program, and I think at the suitable sessions and at the appropriate level, all these things that will be taken care what has been suggested by you. And I, on behalf of Banking Quest, on my own behalf, I extend my heartiest thanks to you for being with us and inaugurating this session and giving a blessing to all of us. At the same time, also, I take this opportunity to extend our heartiest thanks to Mr. Rama, Chief Risk Officer and Chief General Manager, Canara Bank, for being with us and setting the momentum and setting the direction for this program from the risk management angle. Having listened Madam Shashi Ramachandran about his so far banking experience, I am very sure that the Canara Bank in times to come will be leading the banking sector from the risk management angle, and particularly in the areas which are of concern at the industry level, at the regulators level. And with this, I also extend my heartiest thanks to all my senior colleagues who are present here, all the participants for being with us for inaugural of this session. So we are very confident to do the justification with this program by delivery of the various topics which are of concern to the treasury operations at all the level, at the front desk, at the mid office, and at the back office. So with these words, I thank you very much and hand over to Mr. Gulati for the further proceedings.